Energy tech doesn't move forward alone, and neither should you. EnergyTech Cypher brings together the founders, investors, operators, and corporates shaping what's next. From innovation trends to data-driven insights, this is where the ecosystem connects, collaborates, and moves. Find your place in the ecosystem at EnergyTechCypher.com. That's Cypher as in CYPHER, where we bring the community together online and in person.
Welcome back to the show. I'm excited today to be with Gabe Cuadra at Powerhouse Ventures, where we're going to learn a lot about AI today, amongst other things that Powerhouse works in. And very excited to hear about one of the active investors who's still deploying capital in climate and energy. So Gabe, thanks for coming.
Thank you so much for having me. Really excited to be here.
Yeah, good. Yeah. Tell us a little bit about what's been keeping you, I guess, up at night the last year.
What keeps me up at night of the last year? Yeah. Our industry is just changing so fast. And so I started at Powerhouse Ventures about 4 years ago. And at that time, we were still in a time in the power sector where we were really having flat load growth, a lot of focus on carbon decarbonization, what that would look like. AI was used in something people talked about, but not in the same way that it was today, and definitely not seeing the load growth that we're seeing from it today. I think we are in a moment in time with uncertainty that just feels at a level higher in our industry around how much load growth will come on. How will these tools be used both within our power sector or within our energy sector and outside of it? What does it look like to build a great startup today? What resources will you need or won't you need? How will you continue to assess the evolutions of AI every 6 months with things changing as fast as they are? So what keeps me up at night is trying to figure out how we keep up with that and invest in really great companies who can support that transition.
Tell us a little bit more about Powerhouse Ventures. How are you guys organized, and what do you focus on in your investments?
So at Powerhouse Ventures, we invest in early stage, usually pre-seed and seed stage companies that are using digital solutions to advance energy, mobility, the built environment, and industry. So looking for the kind of companies that are going to enable the future of power and really a future of our economy in a way that is cleaner, more resilient, and more affordable. I think folks often ask us about the digital solutions side of that, given that, realistically, to transform our energy system, we have to deploy steel on the ground. And I absolutely agree. The way we think about it and the way we've thought about it for a number of years now is there are a lot of awesome commercial-ready technologies today that can help move the needle in terms of creating that future. But if they're going to be successful and be successful at scale, we need to optimize the way that we deploy them, optimize the way that we operate them, and find other solutions that tend to restrict the adoption of new technologies. And that, software, when we started the fund, was a great tool for doing that. I think when we look at the landscape today, digital solutions, fintech, AI, all of those are great solutions for doing that. And we have a number of examples in our portfolio of companies doing just that, enabling us to deploy solar at scale, enabling us to deploy and operate utility scale batteries at scale, unleashing flexibility across the grid. So those are the kind of things that we look for.
Yeah, I think one of the interesting things about digital solutions is they are a huge enablement when you can kind of think about scalability. But I remember talking to a few of these investors who focus on carbon abatement and saying, okay, we want to invest in things that remove a gigaton of carbon, 100 gigatons of carbon. And on the one hand, yes, we do need to put stuff, steel in the ground or green steel in the ground. And there's a clear carbon abatement. But I'm very curious if you take a lens to say, well, if this enabling technology exists, it unlocks a certain amount. And I've definitely heard it from a group of angels in the Northeast that they discount the effect 100 to 1 because it's really about the steel. It's not about the new enabling technology that leads to decarbonization, so to speak. Yeah. I'm curious how you guys, if you think about that.
It's a really great question. It is absolutely something that we've wrestled with over time. We're pretty thoughtful about not saying hey, X investment is going to drive this amount of decarbonization. I'll use a company in our portfolio called Zeti that helps finance electric vehicles, for example, in the UK. It is impossible to say how much that financing moved the needle in terms of getting more electric vehicles, kind of deployed in fleets across the UK. We would be disingenuous to put a number to that. And I think we can agree that having access to thoughtful, affordable, kind of fit-for-purpose financing is key for deploying the types of solutions that we want to deploy. And so what we look at is, can we show the way in which it will either drive a decarbonization impact or the way in which it will make our power system or our kind of built environment more resilient over time? And so as long as we can point to a company and say this is the way they're enabling that, it falls in scope for our thesis.
Yeah, I feel like I would push so hard and say like financing's the name of the game here, right? Like this is like what made like Ford work because he was able to or GM work because they were able to finance cars, and like no one would buy a wind turbine today up front. You got to finance it, and if you can't figure out how to underwrite, like then there is no deployment. Yeah. So that I totally agree. It's hard to measure what that effect is because you don't have an experiment you can run.
Right. Exactly.
Yeah.
Yeah. I mean, and talk to us about what you've seen change in the past couple of years with the increase in power demand because of AI. How is that maybe changing the way that you're looking for companies to invest in?
Yeah, I think when we think about specifically on load growth and AI, there are a couple of really exciting changes as well as many challenges that come with that. One is the way that we are able to model and operate the grid has changed fundamentally, which is really exciting. Just with the increased computing power that we have, the ability to run simulations and models with new techniques in a way that wasn't possible before. So we're investors in a company called Think Labs, which is providing kind of a physics-based AI operating system for the grid. And the way in which they're able to improve the way the grid is operated, the way in which they're able to speed up things like interconnection reviews is just really fantastic. And they're running orders of magnitude more simulations of the grid than was possible before. And so there's that of how we operate the grid. We're investors in another company called Distill Energy, which is working on how you predict nodal prices in markets over time. And similarly, they're able to run far more simulations and give folks a much more granular view and a much more probabilistic view of what the future could look like so they can make better decisions around our industry. So I think that is one piece that's been really exciting and fascinating. A second piece is utilities are being driven to adopt innovation in a way that I don't think was necessarily true in a time of flat load growth. And it cuts in a couple of ways. I think, we are all familiar with the utility business model where you're, looking to be able to deploy capital that you can earn a rate of return on and then minimize your O&M costs while meeting kind of the reliability and other requirements that your regulators have. In a time of flat load growth, utilities were looking for those capital projects to be able to deploy. I think we might be moving into an era in which the utility has more projects that they want to do than capital they are able to raise. And so that's going to open up innovation, I think, in areas that were perhaps less attractive to utilities before, but now are. And so how do you really think about non-wires alternatives, for example, instead of building out new distribution? We're seeing a ton of interest in flexibility, both for data centers themselves as well as for other types of load. In a way that I think surpasses the interest that we've seen before. And we are investors in a company called Mercury Computing, which is focused on just that, building the tooling so that a data center can trade flexibility for capacity and working hand in hand with some great utilities to help set that up. So those are things that are fundamentally different now because we are in this era of load growth. And then I think the focus on affordability similarly means that, utilities are incentivized from a financial perspective and by their regulators to find creative ways to bring down rates in a way that I just don't think was as pressing of a pain point 4 or 5 years ago when we were just in a very different era of load growth in this country.
And you said you invest in early stage companies, right? So what are you looking for in terms of traction to say, okay, I have enough, it's de-risked enough for me to go in and invest in this technology?
Yeah. So for context, we tend to invest in companies that range from 0 to about $1 million in revenue, right? And so there are cases in which we invest in folks pre-revenue. And in that case, the team has an even higher bar they have to clear in terms of their ability to run a successful company in that space. Like that product market fit has to be excellent. I think it's a little easier when folks have some early proof points they can point to, both to be able to say yeah, look, we've been able to go to market with some customers that are relevant and offer them a solution that is valuable to them. That is a de-risking kind of factor that is very helpful and that we look for. Rarely would I say folks are all the way to product market fit, but they have those kind of early signals that it could be there and that they can run the motion of selling into what are often sophisticated or complicated customers to sell into.
Yeah, so those early signals would be like pilots, letters of intent. What are you looking for?
Yeah, it depends a little bit on the structure of the company. Because we are investing in generally asset-light solutions, often they're able to have a beta or a kind of first product live and being used by some customers. So that's in an ideal scenario. Pilots, depending on what they're building, can be a good proxy. I would say rarely the letter of intent alone enough something that we're going to kind of count a lot in terms of traction. But again, if you have a fantastic founder with great founder market fit and a very clear vision for what they're building, and we're able to validate those pain points with experts, we're able to move even before folks have signed their first contracts.
Yeah. So you said it a couple of times, finding a founder who has founder market fit. So I'd love to hear on what that is, because I think a lot of times when we do business clinics or accelerators, it's about product market fit. But I think you're not the first to have said that on the show, but I would love to hear how you find it or how you spot it.
Yeah, it's a great question. Maybe to put some context into how Powerhouse Ventures sits differently than your typical Silicon Valley investor. The teams that we back tend to be more experienced professionals. So we don't have very many companies where you say like, yep, this team just graduated from Stanford. They're all living in an apartment together, working 90-hour weeks. Like that's not typically the profile that we've seen to be successful in our space. And that is because, as you all know, if you're selling into critical industries, if you're selling into utilities, if you're selling into independent power producers, they're looking for teams and founders and technologies that bring a certain level of credibility that they can trust with things that can explode or things that materially impact everyday life. And so it's harder for them to roll the dice on something that is unproven. So when we think about founder market fit, we're looking for folks who bring that credibility, can walk into the room with a utility, walk into the room with an IPP or a power producer, walk into an industrial facility, and have that credibility right out of the gate. We're looking for folks who ideally have lived the pain point, that they really understand it with nuance, and they understand the reasons why other solutions haven't worked today and can articulate that. We're looking for, and then in a perfect world, we're looking for folks who have taken all of that and found very complementary co-founders who add something to what they're building. And so usually we're investing in co-founding teams. Very rarely we're investing in a sole founder. And it's because we find that our best teams are bringing together multiple perspectives, multiple skill sets that is going to be able to set them apart in the market.
And you're based out of, like, you're headquartered. Where did you start as Powerhouse Ventures?
Powerhouse Ventures is headquartered in Oakland, and that is definitely kind of the core of our operations. But our investment team has become more distributed over time. So I'm here in Houston. I have a colleague in Ann Arbor, Michigan, a colleague in New York, a colleague in Denver. And what I think we've found is, while there are definitely drawbacks to having a distributed team and challenges that come with that, it gives us different perspectives and different networks, and we hear slightly different ideas by having folks spread across the country. And so I think on balance, it's been really valuable for us. The conversation in Houston is different than the conversation in New York, and it's different than the one in the San Francisco Bay Area.
Yeah, it's very funny. Last year, I think during Climate Week, I think the discussion in Houston was, great, load growth is coming. Let's figure out how to build everything. And then the next week, I was in New York, and all the conversations were, oh no, load growth is coming. What do we do? And it's just a difference in mindset, which, it could be illuminating how that perspective really just is different in different markets and ecosystems.
Yeah. Like I see in Houston that, they're, because of the AI load growth, and our experience in building power plants and like just building anything, private equity is just throwing money at anyone who proposes, we're going to build a natural gas-fired power plant. What are you seeing really happen, like especially, putting on your hat in Texas compared to maybe what's happening in the rest of the world?
Yeah, it's a great question. It's been interesting to see the kind of startups that have emerged from our ecosystem. And not surprisingly, they tend to be tied to the industries that have been really successful here in the past. So we have one portfolio company based in Houston, Amperon, focused on power markets, trading, something that has been core to the Houston energy scene for a long time. And I think it made sense for a company here to innovate in that way. I mean, Fervo is the biggest name, but there are a number of great geothermal related companies that are based in Houston or the Houston area. I think that resonates based on the skill sets that we have here. We're seeing some really cool research come out of our research universities and out of industry around industry and industrial efficiency, and some exciting things happening there. I think, we both all spent time at Greentown Labs and seen some of the great work that's happening there. On the digital solutions side, we're still not seeing as much happening here in Houston. I think, while we have portfolio companies spread across the United States and Canada and Europe, there's still a little bit of a gravity toward San Francisco and in the Bay Area there. I think because of the culture of building and because of the tech talent there. Yeah. So we absolutely have great founders spread across the United States, Canada, Europe. And so there's a lot of great talent spread across. I think culturally, there's still innovation that is happening in the Bay Area that is different than what we're seeing in other places. What's fascinating is even though we only have one portfolio company in Houston, a majority of our portfolio companies have customers or potential customers in Houston. And so I think that's the other really interesting part of our ecosystem is this idea of, yes, there might be innovation happening in other parts of the country or the world, and we need to get those founders here to be seeing the customers that they could work with, be working alongside them. So even if they're not permanently relocating to Houston or setting up offices here, continue to drive events like Houston Energy and Climate Startup Week, continue to drive other events like some of the stuff, the work that the Rice Alliance does, that Greenhouse Labs does, to get founders from around the world in Houston, rubbing shoulders with our corporates and allowing them to go a level deeper on their pain points and opportunities and find those hard to recreate kind of encounters that I think can really help get innovation into our corporate ecosystem.
Yeah, no, that is why we started our pilot-a-thon. This is our like one drop for the show. Is like in Houston Energy and Climate Startup Week is we needed a venue for people to come in and be less about the investment and more about like how do we deploy things that are deployment ready. And I think Rice hosts a fantastic event on like Wednesday, Thursday with the Rice EnergyTech Venture Forum, very clearly a venture forum. And we're looking at this and saying, look, the decision makers are in Houston, the people who are going to buy your $1 to $10 million project or be your first contractor or contract. You need to be in the room. And so we want to put together that room. And I think that's a very common theme in energy is you got to figure out how to get to Houston.
Yeah. But the bottleneck, I feel like in Houston is the capital. We just don't have people deploying capital to invest in many of these companies, right? So it's great to have someone like Powerhouse Ventures here in Houston. But, any thoughts on that, on what we could do more to make sure that other venture firms come to Houston and deploy capital in companies that are based out of here?
Yeah, so for founders that are listening, I don't think you should say, oh, I'm in Houston, there isn't capital available. I think in today's world with video conferencing, et cetera, it's just much easier to still find ways to get in touch with VCs across the country. And so you shouldn't also limit your fundraising just to the folks that are based here. So I think that'd be kind of point one is send your deck and your information to folks in Boston, in New York, in the Bay Area. There's some really fantastic investors who are looking for opportunities and scouring kind of the country for those opportunities. I think having events that continue to showcase what's happening here. I think having the Ion District now to say like, hey, there's a place where innovation is happening in Houston, and an anchor point that wasn't here, even 5 or 10 years ago. Yeah. All that is moving in the right direction. It's going to take time, but I think all of that is also really moving in the right direction to be able to showcase the fact that there's innovation happening here. It doesn't have to be the same as what's happening in Boston or the Bay Area. It should have our own kind of unique Houston lens and filter on it, but that there's a reason that folks should be spending time coming to Houston for our events and to meet with our startups.
Where were you before you moved to Houston?
I briefly lived in Colorado, but when I started Powerhouse Ventures, I was already living in Houston.
In Houston. Okay. So you've been here for a while. What can we learn, what can founders learn from the West Coast or the East Coast on like how to pitch to investors?
Yeah. So this is going to be specifically for early stage venture capital, right? It changes a lot if you're looking for project finance, if you're looking for private equity investment, right? So it's something to kind of clarify up front. When you're pitching early stage venture investors, you have to understand our economics are such that we need to be investing in things that can have really massive outcomes. And so you have to paint us the vision of 10 years down the road, the way in which this company is going to be really big. One thing that we see, part of our diligence process is asking folks about how they will be defensible over time. And a mistake that I see founders make is they list off their differentiation today when we ask them about their defensibility. And being differentiated today is super important for starting and for, kind of getting a company off the ground, for getting in the door with your first customers. But if I'm going to invest in a company that is going to ultimately, drive outsized returns, you have to be able to do something over time that others aren't going to be able to replicate. And so what does it look like to build your moat over time is something that I think founders need to be thinking about early on. And it's something that I think is ingrained in those other ecosystems where there's a lot of conversations among founders around, and you're rubbing shoulders with more VCs and hearing the way they think and talk. I think because Houston is an ecosystem so focused on execution, we often are thinking more in that, the next 1 year, 3 years, 5 years. And one of the really hard challenges of being a founder is you have to do that. And you have to be able to think 10 years in the future, how am I going to return money to these investors that are putting money in at the earliest stages?
Yeah, and I think a challenge is a lot of times you'll see on a pitch deck, first mover advantage is the differentiation. And it's like, okay, how long does that last?
Yeah, how long does that last? Like there are plenty of first movers who have not ended up being the successful, kind of outcome in an industry.
Yeah, and a lot of investors are talking about how, they're also a bit wary of investing in tech, digital companies right now because of AI and its ability to disrupt very quickly something that you're building and you think you have a moat and you're the first mover, and then another company can come in with very good developers or whatever, but using AI in a week and they can create the same thing. What are you observing, and what are your insights into this?
No, it's a great question. And I think we have peers who have moved away from digital solutions because of that concern. Our perspective, and this has been true even before AI, but I think it's exacerbated by AI, is the algorithms themselves can never be the moat. Like they can be the way that you have a head start, but you're never going to design software itself that no one is going to be able to replicate. And, securing IP protection for software is very, very difficult, right? And so what else can you do then to start building up something that makes you hard to replicate? In the industries that we tend to invest in, going back to this idea of credibility, one way you do create a moat is by having proof points that folks can lean on to say like, wow, like this product works and does so really well. And this founding team is credible in a way and has a unique skill set other folks don't. I think there is a certain level of moat that can be built there. Maybe it doesn't mean you're the only company that provides that solution, but there's a limited number of folks who will. And the nice thing about selling to utilities is they love to show what they're working on, who they've had success with. And so that can be really successful. We also think about data and data moats. Like, today, data is one of the ways in which you can set yourselves apart from the kind of the rest of the ecosystem. It can allow you to run more effective models. It can allow you to run models faster than others can if you have the right data, and that data has been structured in a way that is excellent. I caution founders not to overestimate how much data corporates will share with them. I think that's the trap folks fall in of like, yeah, we're going to work with, Chevron or Total, and they're going to share all of their data with us. So you have to be cautious on how you will build that data, but I think that is definitely one piece. So those are some of the areas. There, in some businesses you see network effects that can be really powerful. We're seeing more folks embed themselves within companies and make sure their products are embedded throughout multiple steps in a workflow, sometimes even behind the scenes, which makes it harder to rip and replace. And so finding kind of opportunities like that, I think is where ultimately moats can be built in our space, versus just saying like, hey, like I'm the first one to figure out this specific way of building a digital solution and not expecting someone else to be able to replicate it.
What's a nice network effects business that you've seen or worked with?
Yeah, we have we have a business called Rock Rabbit that works in the demand side management space. So they help contractors, manufacturers, utilities, and other incentive providers ease that process of if you can access rebates for a high efficiency air conditioner or for a heat pump or for a heat pump water heater. And what's nice there is, as contractors are use it, that makes it more seamless for the utility to come on board. As utilities using it, that makes it a lot more seamless for contractors that are using it, and really greasing the skids for that whole process and reducing a lot of the soft costs that are inherent in, I think, the demand side management space. And so that's one example of where we can see network effects.
Thanks for listening. If you're fundraising now or know someone who is, I want to tell you about Saffron, our investor relationship management product for energy tech founders. Think of it as a CRM built for energy fundraising. Use our recommendation engine to find the right investors faster and then track every conversation and stay connected through your raise. There's a free tier, so you can start today at no cost. That's CEPHYRON.com. Now, thanks, and back to the show.
Yeah, you mentioned earlier about working with power grid company or and utilities. And one of the things I'm always curious about is as I'm out at these conferences, I meet all these like little companies who are doing a pilot with like, I don't know, 5 to 10 utilities. And I have no idea if that's a lot or a few. And how to tell they're all different, because it feels like a lot of them are an algorithm at addressing one part of the problem. And I'm curious if you can educate us on like, when does it become interesting from for a company who really just seems to be an algorithm plus? And I guess you mentioned 2 companies, Amperon, and I forget the first one you mentioned. They're clearly doing something that's beyond like a little piece of the puzzle, right?
Yeah. So maybe starting with the utilities piece. Utilities will absolutely pilot a lot with and the cycle from going from pilot to full contract can be long and painful, and is a place where many a startup has ultimately gotten stuck. When we think about utilities, I think it's first important to segment the utility market in the United States a little bit in a couple of ways. We'll see some founders come to us and pitch like, hey, there are 3,000 utilities in the United States, and we'll just multiply that by 500K and look how big our market is. Realistically, you need to understand you've got about 100-ish really large investor-owned utilities that are very sophisticated in what they do, deep-pocketed, et cetera. And then you have a lot of really small co-ops, municipal utilities spread across the country. And then you also segment it by, are you a fully integrated utility, like in Excel, Colorado, that owns generation, transmission, distribution, and the end customer? Or are you in Texas, where all of that is separated, right? So you have a lot of different kind of subcategories within utilities. At the most fundamental level, either you need to be able to say, like, we can navigate really long sales cycles with those big utilities, and there's a multi-million-dollar contract or $1 million contract at least on the back end, and then you can start to see the pathway for how that becomes very big. Or if you're going to try and sell into the other thousands utilities, you have to make it really easy for them to adopt your product and really seamless and really quick. Where folks get in trouble, I think, is when they get stuck in the middle, where the contracts they can demand from utilities aren't that big. They don't have a pathway really for expanding them even once they're inside a big utility, and yet they're still navigating year-long, 18 months pilot and sales cycles. And then the revenue just becomes difficult to kind of stack together. So what we're looking for, going back to kind of your original question, as folks are piloting with utilities, is why did the utility choose to do this pilot? What is the scope of that pilot versus what a full rollout would look like? And then, is this such an issue at a utility to where you might see that sales cycle come down a little bit? So, in the best of cases, we're looking for issues that are C-suite level kind of conversations for a utility. And if it's not a C-suite level conversation for a utility, then other pieces of the kind of business model need to be very, very compelling. And you really need to understand, or help us understand, how you're going to navigate the sales cycle length and how there's an opportunity to really grow revenue on top of those contracts over time.
I'm curious. So obviously you weren't always a venture capitalist and weren't always an energy VC. What kind of landed you in this path, and where you said, I need to like work on energy specifically?
Yeah. It's been a little bit of a winding journey. The short answer, I came from the industry side, which is great. The longer story is I grew up mostly in Houston, around the energy ecosystem. My dad spent his full career with BP. He's a chemical engineer by training. A lot of his work was in downstream in chemicals, but he got his MBA and spent time in other parts of the business as well, where he was, I think, drawn to the engineering side of things. I was always fascinated by the markets, the policy, the geopolitics, et cetera. So went to undergrad to study economics, thinking I wanted to work somewhere in kind of policy and or international kind of work. For those who know Ken Medlock over the Baker Institute, he played a pretty pivotal role. I don't know if he would know that. I took 2 semesters of energy economics with him. And this was at the time where Texas had just deployed kind of first wind at scale, to where you were beginning for the first time to see negative prices in ERCOT. And so I remember kind of walking through the way the power system had always been deployed of, your base load power. And then, as demand goes up, you deploy your next kind of tier. And then on your peak days, you deploy your peakers. And him taking some time to say, like, that is changing really rapidly as you have these zero marginal cost assets that are unpredictable, like wind and solar coming online. And now you have these negative prices. You don't really, you're trying to manage this. And suddenly I think two things became clear to me. One was that the energy transition was going to make the power sector very interesting, and that it could have a really exciting kind of impact on decarbonization and climate change. So I tell folks the light bulb flickered at that point, didn't come all the way on. Out of school, I joined the Peace Corps and went and worked international development, scratched that itch, spent, instead of spending the normal 2 years, spent 4 years in Costa Rica as an economic development volunteer. Had a fantastic experience there. Met a girl there, which is important for two reasons. One, she eventually agreed to marry me. And two, I followed her to Denver and kind of got my start in energy transition in Denver. And so had left the Peace Corps, knew I wanted to work on energy transition issues that had kind of become clear during my time abroad. Didn't know exactly how to get my foot in the door. And after a lot of no's on applications, took some classes at the University of Colorado Boulder. At the time, they had a professional certificate in sustainable energy. And through that program, got connected with a company called eSource, which does data science research and consulting for electric and gas utilities across North America. Their origins are from the Rocky Mountain Institute and the work of a guy named Emery Levins, who was the first to say, like, hey, what people care about is the services energy provides, not how many kilowatt hours come to their home or how many therms they use, right? What they want is hot showers and warm meals and or cool days in Houston during the summer, right? And so I joined eSource's demand side management team. First, just an entry-level position, managing a database, grew that over time and got to run our data products, got to run operations for our division, got to do some research. And I tell folks I had the opportunity to learn the industry backwards, where normally I think in our industry, we start at the power plant and work down, or we start at the wellhead and work down, right? And what eSource forced me to do is to say, okay, start with the end use customer. What do they care about? What are they trying to do? How might we be able to encourage them to do the thing that is most beneficial for the system at writ large? And now work backwards and see what those impacts look like and how much value there is there. And so it was really awesome way to get to learn the energy and the industry, and then I get to work with utilities, and so understand a little bit of what that is like, and met some really fantastic, sharp, thoughtful, motivated people within utilities, and am very thankful to have had that experience. And then I'd known the Powerhouse Ventures team for a long time. After they raised fund 2, they were looking to expand their team and were interested in adding folks with industry expertise, and were willing to roll the dice on someone who didn't bring the traditional finance side. So really thankful for this opportunity. I've been with Powerhouse Ventures for 4 years now. I've learned a ton, work with amazing teammates, amazing founders, and just trying to make the most of the opportunity.
That's a fascinating story. Yeah. I think a lot of people talk about how it's hard to break into venture. And so it's a great example of how, you could be in industry. And now venture firms are valuing a lot more that experience that people from industry actually bring.
Yeah. I was thinking, as you were talking, are you coming from this kind of end user perspective? I feel like a trap a lot of times we fall into as like climate entrepreneurs is thinking that there's a premium or value on kind of the green premium. And here in Houston, sometimes we would talk about, renewable and natural gas. And the reality is the spread's very small because most people just want to be the right temperature. They just want to be comfortable. They just want the lights on, and the climate and energy technologies need to deliver both, but the end user, the majority of them, like, honestly, it's not a big driver for them. And it's unfortunate, but that can't be the only story, right?
No, agree. And the other piece I would add on is most people don't want to think about their energy usage either. They want to walk home, turn on their lights, kind of get their bill at the end of the month, assume it's going to be within a certain range, and then go back to the rest of their lives. And I think another trap that I've fallen into and that I see entrepreneurs fall into, especially when we look at kind of demand side management solutions or load flexibility solutions, is assuming that everyone else thinks and cares about energy in the same way that we do, right? And if your solution is going to work, you need to make sure that it can be something that folks don't have to spend much time thinking about. And so there's a psychology part of load flexibility that is really important, as well as the economics part. And I think the best founders understand, and best companies, understand both of those when they think about their solutions, especially if they're looking at mass market demand side flexibility.
Talk to us a little bit about your process from, when a company comes and pitches you and you kind of find them interesting to actually making that decision to saying, okay, we're going to pull the trigger, we're going to invest in this company.
Yeah, absolutely. We try and do as much kind of homework as we can before we take a first call with the company, so we can come and have a real conversation instead of having folks kind of walk us through a pitch deck. So usually we ask folks to send us their materials beforehand. We review those materials, and we really have, like I said, just more of a back and forth. Like, tell us a bit about your team, about how you met each other, about why you decided to start this business. Some entry level kind of questions about the product and the market and their perspective on it that we customize based on the startup. Assuming that goes well, kind of the next step in our process is a meeting with our full team that has two purposes. One is to say, like, have we seen enough here based on their materials in that first conversation to commit more team time to this process? And second, what are the areas that we really want to make sure that we dive deep on as we move forward in the process? The third step then is usually a 1 hour call that is part product demo, which can vary depending on the stage of the company. It's very different to a product demo with a team who is pre-product compared to one that has, $900K in revenue. And, kind of a series of follow-up questions based on that team discussion. From that point forward, our diligence process varies depending on if we are the lead investor or a follow-on investor, how much we know about the space, the team's credentials, et cetera. But it always includes a couple of elements. It includes a few more technical diligence calls with founders. It includes a lot of behind-the-scenes work on our end to really make sure we're understanding the nuances of the market, talking to experts, that can help us cover our blind spots, like knowing that we will never know as much about a company as the founders do. Like, we want to be able to go to experts and have a lot of the story we're hearing from founders validated by those experts. And then we always include something that we call internally a character call, but it's more of a qualitative discussion with the founding team to understand what is going to make them successful given the pressures that come with taking venture funding and the ups and downs that come with that. How do they work together? How do they resolve problems? How do they think about hiring, which is such a key piece of being an early stage founder? So those are maybe more of the human pieces that we want to bring in as well, because we're investing as much in a team as anything else at the stage that we invest in.
Are there any red flags that you can think of when you're interviewing the founder or trying to understand the team?
Yeah. Red flags. Folks who aren't committed to building a great team culture, or folks who don't have a vision for how they're going to hire, grow, and retain great talent. I think that is definitely a flag. Again, going back to how important early hiring is. Teams that don't have a good perspective on how they're going to avoid burnout. Like, walk us through how you manage stress, because it's the journey you're about to go on is a stressful one, and so we need to know that you're going to be able to do that. Companies that are maybe dismissive of their customers is one that I will highlight, because we see that sometimes, especially for teams selling into the utility space. I think especially teams that are, and also into industry. I think generally this is true. You'll have teams who say, like, look how far behind X industry is, my technology will solve this. And I think it is important to have some empathy for why the status quo exists, and be able to explain, like, this is why it's been done the way it has been before. This is why this software that's used today looks like it was built in the 80s or might have actually been built in the 80s. And this is the way in which we're going to help make that transition to something that is going to make people's lives easier and allow them to unlock kind of their own kind of potential at work. And it's a nuanced difference, right? But I think there's I've seen a very big difference in founders who disrupt an industry coming in with an appreciation for the folks that they're going to be selling to and working with, versus folks who are a little bit condescending toward the folks they're looking to sell into or disrupt.
I wonder if that also comes back to like coachability, so to speak, or just like being able to listen to the customer. Yeah, interesting.
Yeah, because a lot of times these founders are like visionary, right? So they have lots of great ideas, but then are they willing to, listen to what the customer wants, what the market needs, and adapt accordingly? Yeah,
exactly. Yeah, that's another, and that's a really great point I'll add on too. Is we sometimes see founders who are in love with their own technology, or love the science piece. Yeah. And you obviously need to be passionate about what you're building,
Mm.
but not to the extent that it blinds you from the commercial realities of like you're building not only a for-profit business, but one that we're investing in growing to be massive. And so if you are so in love with the science or the technology that you aren't able to put on that commercial hat and lean into the commercial needs of the business, I think that can be something that we see some founders struggle with. And one of the reasons that a co-founding team can be so important, because you can find folks that balance you out in a co-founding team.
Yeah. Bring us into the IC meeting. How does that usually go down and work?
Yeah, it is let me think about the best way to describe it. I think our team prides itself on being thorough. And so our partners walk through both ahead of time and then in those meetings, elements from top to bottom, like starting with the team and working down. And all the areas that there's no area that I can say it's gonna be surprising. Like we're looking at team, we're looking at market, we're looking at differentiation, defensibility, traction, exit, all of those pieces. There's just a bit of an art of how do you weigh the strengths and weaknesses and risks of a company, and how do you think the market will evolve over time, either in favor of the company or against it. And so it is a lot of having our partners in the broader team challenge whoever's leading the deal on all of those pieces to make sure that we are really pressure testing. And something that we did adopt, not at our final IC meeting, but in kind of a stage gate meeting that we have before there, is actually assigning someone on the team, like what we call the red hat, but someone who's going to come in and be the lawyer arguing against the deal. And what we found is that can be an effective way to help us ensure that we are not getting caught up in groupthink, that we are not overlooking perhaps some issues, and we found that to be effective.
Interesting.
Yeah, I've heard about that before, like giving someone that red hat and just saying like, you're the devil's advocate here,
exactly.
like you ask the questions, and it allows the rest, and groupthink is a big problem. Like right now, everyone wants to invest in AI companies, but yeah. Awesome. What, advice would you give to startups who, maybe, want to pitch to Powerhouse Ventures? And, how can they stand out from like the numerous applications that you get?
Yeah. First, and this goes, I think, for any investor you're pitching to, is research the fund before you have the conversation with them. Know what they've done before, know how you kind of sit next to their other portfolio companies. I think that is always a really great signal for us that you showed up to a meeting prepared. You did your homework. You're taking this kind of process seriously. I think being able to really articulate why your team is uniquely suited to do this. Well, like, what is it that makes you complementary? Like, don't be afraid to be to brag on yourself and especially your co-founders a bit. I think that is something that is really important and that we don't always see folks do. And then going back to, I think, something we touched on earlier, you have to walk us through the short-term kind of vision for the business and then take it all the way to the longer term, because we are investing in a long journey, and we need to understand both how you get the rocket ship off the ground and then how you navigate it to the moon, so to speak, to use the really painful classic VC analogy.
Yeah, no, I find at least the founders who remember are the ones who really find a good way to insert themselves in the story and make it easy, obvious from the beginning, like why they're the ones who have to figure this out.
Exactly.
Yeah, interesting. I'm just looking at the clock and I'm like, we got like 10 minutes left here.
No, I think we're almost at the end.
Yeah.
What are you excited about in the next couple of years? Within the startup ecosystem to invest in? What kind of technologies? What are you, what gets you excited?
Yeah. I'm going to hit on some themes, so apologies for the repetition, but I think we have seen the ability to unlock capabilities that weren't possible before, given compute and AI. And so that is really exciting, as well as the ability to do things that weren't cost effective before, thanks to AI and improved compute. And so businesses that just you could never make the economics pencil, all of a sudden they're starting to pencil. And so that I think is really exciting. We talked about changes that come with load growth that I think present both real challenges, but also opportunity because of that, where utilities are going to be looking, or other kind of grid players are going to be looking for innovation or forced to look for innovation in a way that they hadn't before. So I'm excited about that. We continue to invest in resilience, and I think it is something I'm personally excited about because extreme weather impacts all of us, right? And we're only seeing more of that, unfortunately. And so, we have a company called Class 3 Technologies, which helps building owners or understand what their risks are in the face of different types of disasters, and actually the measures they can take to prevent or to mitigate those impacts. And so seeing kind of evolutions like that of, we're no longer just putting out scores to say like this building is a 2 out of 10, don't buy it. Now it's saying, okay, this is your building, this is your facility. How are you going to be ready for a storm that could hit? I think that evolution has been really exciting. The changes in what we're able to do in terms of weather forecasting with more precision, more speed, and what that can unlock both in terms of operations and resilience has been very exciting. Other areas that seeing the way in which load flexibility is starting to be accepted as a solution, even more so than it was a couple of years ago, driven by load growth and AI and some of the announcements that have come there. That is something that I'm personally excited about. And then it's been a quieter time on the electric mobility front over the last several years, especially in the United States. And I think the emergence of autonomous vehicles maybe crossing a little bit of a threshold is going to start changing that. And so I don't have a crystal ball in terms of how that will play out. But we're starting to see some innovation on the mobility side and some new challenges related to, and new opportunities related to electric mobility that I'm hoping we see more innovation in the next couple of years.
Super exciting.
Yeah, it's an exciting time.
Yeah.
What are you excited about for Houston?
Yeah.
Let's ask that one.
For Houston, I think we did our first energy and climate startup week 2 years ago, if I'm not remember. And I was like, oh man, like it's going to be like 100 people and all the folks that I see all the time. And the fact that we had folks fly in from around the country and in some cases internationally to come be at that week, and that was year one and something that we can build off of, that's what makes me excited. Is that we are, I think, more on the map than we realized. I think, some high profile successes like Fervo have put us even more on the map.
Right.
And so the fact that we have that foundation to build off of, that we're seeing continued investment in the Ion district, I think with ARC kind of going in the next couple of years, with Activate launching in Houston, like another huge kind of coup for the city. So we just have a lot of momentum right now that I think if you would have said 2019, like, why is Houston a good place to innovate? And you couldn't point to all those resources that we can point to now, and all those reasons why we're bringing in great, innovative founders. And so that's what makes me most excited. And then I think something that we have had for a long time that is going to continue to help us play an important role in the kind of the future of energy is that traditional finance arm, and great kind of I'll call them like hybrid investors. NGP is a good example of them, of this, where they do some equity investment, some project finance, something that look more like PE, something that look more like venture, and that flexible kind of capital that can help deploy assets at scale where we need them. It's just really fantastic, and I think not something that every ecosystem has a good muscle for. And so combining those two, I think all the momentum we have on the startup side and bringing forward some of the traditional advantages that we've had on the finance side are really exciting.
Yeah, and just to kind of iterate, so Houston Energy and Climate Startup Week, for those who don't know, is the week of September 14th. We do it the week before New York Climate Week, so it doesn't overlap with another big climate week. So if you're not in Houston, you should definitely come down for that. It's a great way to meet the industry, see what's going on in the ecosystem. And a great way to come down here and connect with Powerhouse Ventures.
Exactly. Yeah, would love to. Let me know.
Thank you so much for coming on. How can our founders reach out to you? How do they connect you? How do they find you?
Yeah, our website is powerhouse-ventures.co. And so if you go on there is a way to contact us, or feel free to reach out to me on LinkedIn. Always happy to connect with folks there as well.
And you're often at Greentown Labs.
And I'm at Greentown Labs, try to be there at least once a week. And so if you're around Greentown Labs, please look for me there.
Awesome. Thank you.
Thanks for joining us.
It's been fantastic. Thank you both. Really appreciate it.